China's decision to replace the dollar with gold collapses the US economy. Does Trump have any options? The US dollar has held its position as the world's leading reserve currency for several decades. This dominance was consolidated after World War II, when in 1944 the Bretton Woods Agreement was signed, an international treaty that established a new global monetary system. This agreement linked the main world currencies to the US dollar, which in turn was backed by gold at a fixed exchange rate. The idea was to stabilize the economies of the countries affected by the devastating effects of the war, creating a system where the dollar was the axis of international transactions. Although this fixed exchange rate system collapsed in the 1970s, the role of the dollar as the dominant currency in international markets was further consolidated, thanks to the strength and stability of the US economy. The concept of exorbitant privilege, coined by former French Finance Minister Valéry Giscard d'Estaing in the 1960s, sums up the advantages that the United States has enjoyed by being the issuer of the global reserve currency. This privilege has allowed the United States to keep borrowing costs low and finance large trade deficits without facing the same economic repercussions that other countries would experience under similar circumstances. Over the years, the dollar has been the main vehicle for international trade and investment, which has allowed the United States to maintain a high degree of influence in the global economy. In the context of geopolitical tensions, especially after the events of September 11, 2001, the United States government has intensified the use of economic sanctions as a foreign policy tool, taking advantage of the centrality of the dollar and international financial networks. This has been especially evident in the case of countries that do not follow US policies, such as Iran and North Korea. Through its control over key systems, such as the Society for Worldwide Interbank Financial Telecommunication, SWIFT, the United States can block financial transactions between other countries and the rest of the world, which further increases its global influence. However, the growing militarization of the dollar and the use of economic sanctions have generated growing concern in several countries about their dependence on the dollar. In particular, emerging powers like China and Russia have begun to explore ways to reduce their vulnerability to US economic influence. This trend has led to a process known as de-dollarization, which involves the diversification of international reserves and the use of alternative currencies for international trade. In this context, China has played a central role by seeking to reduce its dependence on the dollar and increase its influence in the global economy. One of the key methods it has used is the internationalization of its currency, the yuan or renminbi. China has promoted the use of the yuan in international trade and has established swap agreements with several countries to carry out transactions in its own currency. This strategy is designed to lessen the need to use the dollar and challenge the dominance of this currency in the global financial system. In addition to these measures, China has taken important steps in accumulating gold, which has had implications for both its domestic economy and for the global economy. In recent years, China has significantly increased its gold reserves, an asset traditionally considered a safe haven in times of economic uncertainty. In 2023, China reached a record 276 tons of gold in its reserves, reflecting its growing focus on this precious metal as part of its reserve diversification strategy. This process of gold accumulation began in 2018, with purchases of approximately 250 metric tons. But in 2023, the number exceeded 550 metric tons, which represents significant growth in a short period. The increase in China's gold reserves has several underlying motivations. One of the main ones is the diversification of its international reserves. For decades, China's reserves have been dominated by the US dollar, which accounts for approximately 60% of its holdings. However, growing economic instability and geopolitical tensions, especially with the United States, have motivated China to seek safer assets that are less vulnerable to US sanctions or manipulation. In this sense, gold serves as a hedge against inflation, currency fluctuations, and the risks associated with currency devaluation. Another important factor in China's decision to increase its gold reserves is the desire to strengthen the yuan's position in international markets. China has been actively promoting the internationalization of its currency, encouraging its use in global trade and seeking bilateral agreements to facilitate yuan transactions. By increasing its gold reserves, China can use this asset to back its currency, which could increase confidence in the yuan and reduce dependence on the dollar. This could also strengthen its ability to influence international negotiations and increase its influence in global financial institutions, such as the International Monetary Fund and the World Bank. The strategic accumulation of gold also has a geopolitical component. In a context where economic sanctions have become a key tool of US foreign policy, China has sought to reduce its vulnerability to this type of pressure. Unlike dollar assets, which can be frozen or manipulated by the US government, gold reserves cannot be easily frozen or sanctioned. This makes gold a particularly attractive asset for countries facing economic sanctions or financial restrictions. In fact, gold has been one of the main alternatives for those countries seeking to circumvent sanctions imposed by the United States. China's strategic approach to gold can also be seen as part of its broader vision of making the yuan a global reserve currency. By accumulating gold, China is creating a solid foundation on which it can back its currency, thus increasing the possibility that the yuan will become a more widely used currency in international trade. This strategy is consistent with its goal of challenging the dollar-dominated financial system and creating a more multipolar system in which major economies have greater control over their own monetary policies. In addition to the economic and geopolitical implications, China's accumulation of gold also has significant effects on international markets. As China continues to buy large quantities of gold, this puts upward pressure on world prices for this metal, which can lead to increased demand in other countries. In turn, this could affect financial markets and global economic stability, as investors tend to see gold as a safe investment in times of uncertainty. This increased demand for gold could also influence market liquidity, facilitating access to this precious metal and increasing its worldwide trading. The impact of China's gold accumulation on the United States economy is complex and multifaceted. On the one hand, the fact that China is diversifying its reserves and reducing its dependence on the dollar could have negative effects for the US economy in the long run. The main advantage of the United States being the issuer of the global reserve currency is its ability to borrow at relatively low rates, which allows it to finance trade and government deficits without facing the same economic consequences as other countries. However, if more countries were to de-dollarize their economies and reduce their exposure to the dollar, this could increase borrowing costs for the United States and reduce its economic flexibility. In short, China's accumulation of gold is an economic and geopolitical strategy that has profound implications for the global economy. By diversifying its reserves and reducing its dependence on the dollar, China is taking important steps to strengthen its position in international markets and protect its economy from external sanctions or manipulation. As the demand for gold increases and the yuan internationalizes, the dollar's dominance in global financial markets could be challenged, which could lead to a reconfiguration of international monetary systems in the future.